Welcome back, guys, to our YouTube channel. So today class, we shall be talking about the ask price and the bid price. And it's very, very important as a beginner in forex to understand the meaning of ask price and bidding price. So please, guys, make sure you subscribe, like, and share my video as fast as possible so that each time whenever we make a new video, you are going to be informed as fast as possible. So as I said, we are going to be talking today about the ask and the bidding price. It's very, very important because we have so many forex traders trading and losing money, and they begin to blame the market that it's a scam. But I want to assure you that no, it's not a scam. So you need to understand some of these things very well so that it can become very, very profitable in the forex market. Forex market is very simple, but it's just that you need to master the various fundamentals. You need to master what the various principles well. What needs to be done in the forex market so as to become very, very profitable like some of us in the forex market. So as I said, so let's see how the ask price and the bid price in forex market does what is really happening concerning the ask price and the bidding price. So as I said, in the financial market, we have only two buyer parties involved here. We are going to have a buyer and a seller. We are going to have a willing buyer and also a willing seller. So because without the buyers and sellers, there can't be any financial market, there cannot be any market. So let's take a simple illustration here. Let's take the first case about the bid price. Let's talk about the bid price. And here, I will just talk about the bid price here. Now, take for example, now you put yourself, you are here, and we also have now the buyers are here. When I say you, it means you are the seller. So you are the seller and you want to buy. So you are the seller. You want to sell to who? The buyers. And maybe you want to sell, for example, you have assets like currencies. You have assets like currencies where you want to sell. You have something like gold. You have something like crypto. You have something like stocks. So in these stocks now, you want to sell. So you are in possession of all of these commodity, of all of these assets. And now you want to sell this asset now to a willing buyer. At this particular point, you are a willing seller. You want to sell this asset that you do have to a willing buyer. So and now this is where these things comes in. Now for you now to understand the bid price and the ask price. So when we talk about the bid price, it means that what is the lowest? It means that what is the lowest price in which you are willing to sell to a willing buyer. And these buyers could be traders, they could be traders, they could also be what? Brokers. And get to the point now, depending on the type of broker that you are using. So in this case, you are the one selling to the buyer, to the willing buyer. So in this case, see that what? These guys are buying. So a good buyer wants to buy this your particular asset that you're in possession. Those assets can be what? It can be currencies. For those that are engaged in forex trading, it can be stocks. For those that are engaged in stocks trading, it can be crypto. For those that are involved in crypto trading, they can also now be what? Maybe gold, like metals or commodities. For those that are involved in commodity trading. Now, these buyers want to buy this particular asset from you, and you want to sell. You are the willing seller, and you want to sell to a willing buyer. So the bid price is therefore for you. So the bid price is therefore the lowest price in which you can sell this particular asset to a willing buyer. Meanwhile, now for buyers, so a buyer now will therefore not consider the bid price as that highest price in which he is willing now to offer to buy this particular asset or to buy this particular commodity. Now let's go now to the next one called the ask price. So ask price is very simple. It's just the opposite of the bid price. As I said, you're also going to have the two parties sitting involved here. You're also going to have the buyers. You're also going to have the buyers and also the sellers. But in this case now, you're not the one selling now. You're instead the one buying. So you are here. So I'll put yourself, you are here. I'll also put here what? Yeah, in this case, that's simply what? The traders. They are simply now the financial market traders. Or they could also now be what? The brokers. So at this particular point, these brokers now wants to sell to you. So at this point now, you're a willing buyer. So you want to buy this particular asset. So in that case, you are going to look at what you now the one buying. You are going to see now the ask price as that highest price. You are going to see now the ask price as that highest price in which you are willing to offer to buy that particular asset. But now these people selling, we therefore see the ask price as the lowest price in which they are willing now to sell that particular asset to you. So as I said, the bid price and the ask price are very, very simple. So this one for the bid price is that price in which, so it depends on the two. So the way the buyers and sellers are going to find it are a bit different, but they are just the opposite. For the bid price, the price in which is price in which you are willing to sell that particular asset now to a willing buyer. And meanwhile, for a buyer, and I'll say buyers can be like traders, can be like brokers, is that highest price in which he or she is willing to buy. But when it concerns now the ask price, so the ask price is the price in which is that highest price in which you are willing to buy from the seller. And now for the ask price, now this is how a seller now is going to also now define the ask price. Is that price in which he or she now is willing now to do what? To sell. That's what we call it now what the lowest price. Is that lowest price in which the seller is willing to sell it to you, because the market is made up of who? The willing buyer and also the willing seller. So you also need to understand that if you have understood those two ideas very well, now let's just now look at what where spread comes in, because as a good forex trader, you also need to understand the spread. And when we talk about the spread, I said a spread now is therefore what? The difference now between the ask price and the bidding price. So when we talk about the spread, so the spread now equals to now what? The difference. So spread now will therefore now be the difference between, you can therefore now say the ask price minus the bidding minus the bid price. So that's how you're going to have as a spread. And to have a simple illustration here, and you can discover that the ask price is always more than the bidding price. It's very simple. Now let's take a simple illustration for you guys to understand when we talk about the ask price and the bidding price. So let's take yesterday trade. And yesterday, for those of you guys that were trading the Z, that were trading gold, where you are going to have ZAU paired against the US dollar. As Ella said, this one is the base currency and here is a code currency. So for those of you guys that were trading yesterday, if you're trading gold yesterday, and you are going to discover that yesterday trading, gold ended up right. So you are going to, as Ella said, the first one is the bid price and the second one is the ask price. So in the financial market, so you're going to, if you go to if you open your different trading platform like MetaTrader 4, MetaTrader 5, you are going to have the different trading platform. So you can see that yesterday the gold ended up, so the bid price of gold was, so for those that, if you were trading gold, you discover that the bid price was 4,532. So it ended up with 4,532.568. And here now was the ask price. So the ask price now was therefore 4,532.728. So we said this one will be the bid price, and here will be the ask price. So here will be the bid price, and here will be the ask price. And you can tell that what? The bid price is lower than the ask price because this is a price in which you are willing to sell this particular asset, this particular asset or this particular commodity now to a willing seller. And those willing sellers can be who? Can be like brokers, can be like buyers, can be those willing buyers in the financial market. And you see, it ended up with what? So $4,532.568. And now, if you want to buy this particular asset, I'm saying in the case of you are the one buying. So if you want to actually buy this particular asset in the market, it means that the ask price now will therefore be what? 4,532 now 0.728. So discover that what the asking price is more than the bid price. And the difference now between, so we are saying that now, so their difference, if you take now $4,532.728 minus 4,532 now 0.568. I'm sure they are going to have something like 0. So you discover that what? This 0.40, right, is therefore a loss to you, the person buying, because it's a transaction cost. It means that transaction cost is simply what? The fee which you therefore pay to access this particular market. So it means that if you are entering this market, so if you're entering this market, you are going to buy at this particular amount. But if you are to sell it now, you sell it at this particular amount. So if you enter the market, so if you enter the market, right, this is the price in which you are going to buy. But if you want to sell at that same point, this is the price in which you are going to sell. And if you take that two difference, you are going to have what? $0.40. And this $0.4 is what we call the transaction cost. It's therefore what the fee that you therefore pay in order to access the financial market. So thanks so much, viewers. So make sure you like, subscribe, and share this my video as fast as possible. And in our next class, I'm going to be talking about the lot size the pips, and also the leverage, because those are some of the fundamentals that you also need to understand if you want to become very, very profitable in this our forex market. Because as Ella said, what matters is the fundamentals. We have a lot of opportunities for everybody. If you can just stay tuned, you take your courses well, you master your fundamentals well, you are going to become very, very profitable in the forex trading as fast as possible. Thank you so much, dear viewers.